Thank you for tuning in another episode of the Sonny Chung Podcast. And if you haven't subscribed or like our podcast, please do so. This help me to know if the content and what I share, hopefully all this episode can bring some value to your business or to your personal growth and your professional development. In addition, I just want to share a little bit what I do, and if I can be helpful to you, is business development and also a real estate advisory. We help connect sponsor to programmatic relationship to bring capital to your project, from joint venture equity to debt, and create a long-term relationship with you. If you interest in our service, feel free to contact me through my email address is sunny@stonewoodintl.com, or you can book a call with us through our website is stonewoodintl.com, and you can see in the background to help you find us easier. Please enjoy this new episode. Thank you for watching. Today, I want to discuss with you a very important issue. People don't invest in a deal, they invest in the people they trust. Today, we're going to talk about how trust is built, how stories shape opportunity, and why relationship still matter more than ever. I'm your host, Sonny Chung, and today I'm excited to be joined by Angela Hwang, founder of RevGen Consulting. Angela has spent more than 20 years helping fund manager and sponsor grow their business through marketing, investor relations, and raising capital. She have helped raise more than 200 million in direct investment. And today, we're going to talk about something that's matter more than ever, building trust in the next generation. Angela, welcome to the Sonny Chung Podcast. It's a pleasure to have you on here.
Thank you.
Can
Thank you
you
for having
please,
me.
thank you. Can you please share a little bit about you, what the audience don't know who you are and what you do?
Yeah, absolutely. I'm really happy to be here. So my background, I started my career in marketing and business development, as you said, about 20 years ago, helping, real estate sponsors. And I also worked in legal marketing and the tech startups. And, looking back, my area of expertise has always really been on business development and revenue generation. I'm a firm believer that, you know, uh, building the relationships and helping grow your brand and really building the long-term relationships with your industry colleagues and investors and clients, that's the most important. So I've worked in various sectors: financial services, real estate, investment, and tech. And now I focus exclusively on helping real estate fund managers, sponsors raise capital from direct investors.
I love that. Thank you for sharing that, Angela. Before we discuss about capital raising and the marketing, I would love to hear how you start and what led you to inspire you to start RevGen Consulting.
Yeah, absolutely. I have to be honest. If you told me 5 years ago that I would have my own business, I would have thought, oh, absolutely no way. Because to me, I always thought that corporate was the way to go.
Mm.
It's the stability, right? It's the stability, and also, working in house and just being dedicated to one brand. And, I think I made it as far as I could as a marketing professional. My last corporate job was as chief marketing officer for the private equity firm. And I thought, oh, this is great. But then I quickly realized that I really love, building relationships with, various people and companies and so forth. And I thought, I should really just go out there and see how I can help more people. So it kind of started out with, okay, instead of just being in-house and focusing on one company, how do I make myself more valuable to people that can really use the marketing help and the services? And I think I may have mentioned it to you, briefly before. One of the reasons that I wanted to have my own marketing consulting business is also because there's a lot of very, really terrible marketers out there. And I'm really sorry to say, but I used to
Yeah.
see it from the other end, and I would
Mhm.
see all these companies spending so much money on, agencies or the service providers that really didn't care about the revenue generation. It was all about just collecting, the retainers. And to be
Right.
honest, like, it really bothered me because first it's putting, it's a stain on the marketing, like career, just the reputation of marketers, right? And second is, I really don't want sponsors out there spending money when they don't have to spend the money. So I wanted to just really add value and be, in the trenches with them and see, okay, if this was my money, how would I spend it? And that's the approach that I have. And that's why I always say, I don't have a marketing agency. We're not an agency model. I'm your consultant. Like, I'm your partner. Like, I want to be your marketing partner to really help you, succeed. And I also don't like to make false promises. I'm all about, how do we do this? This is for long-term success. I'm not here to give you quick wins. I'm not promising you anything that's going to happen in the next 30 days. Like, let's build this together. So that's how I founded RevGen Consulting, and we operate differently because of that, because I want to make sure that clients know that, we can do a lot of really great strategic marketing. We can do a lot of initiatives, and we can do a lot of tactics, and, just like focus on success without spending a ton of money. And I want them to see me as an extension of their team. So that's why I really founded RevGen, and I feel very passionate about it because I see so many people just, just selling and selling, and they don't even ask their clients a question about what are the problems you're challenging. What's the problem you're facing? How do I fix it? So I always come from like a problem solver.
I like how you frame that. You actually become a problem solver than just selling it, right? Instead of making retainer, it's kind of that extended team for their marketing campaign and actually help them achieve their goal instead of, okay, here's the retainer and let's see how this thing work or might not work. And it just doesn't help with the project or sponsor. And that's a great strategy that your company designed. Because of it, I can see how you able to work with your fund manager and raise more than $200 million in direct investment. In your experience, when you do that, what build investor trust before they review the numbers?
And that's a great question because I feel that oftentimes, especially emerging sponsors tend to falsely believe that the investors only care about the returns. They only care
Yep.
about the numbers, and they put spreadsheets after spreadsheets in front of them. And I always say, no, no, no. What they want to know is who you are
Right.
and why should they trust you, with their money. Right. And the way that you build that is not overnight. And I always say there are three things, and it's visibility. Are you visible in the market? Can investors find you online? If investors ask about you to other people, do they have an inkling of who you are? And then there's the credibility. Okay, let's say that you have some online presence. Are you a credible fund manager? Is your team well known? What's your track record? Are you an expert in this? Are you clearly communicating what you're offering to the market and so forth? And then the third is the infrastructure. That's more of an internal thing, but infrastructure is like, do you have a process in place? Do you know how to properly manage, investor relationships and so forth? But the first two things, I feel like that oftentimes gets overlooked because it takes time to build that. It's that consistency, and it's demonstrating your expertise through thought leadership and being active. And, unfortunately, some fund sponsors are very social media adverse to that. Like, they don't want to be on LinkedIn. They don't want to do all this. And I always tell them, well, like, why would investors want to invest with you if you're not even seen? Like, you're not even
Right.
there. And I think that comes from this, I think that comes from kind of like the institutional like the background, right? Like a lot of institutional relationships are very like hush hush. It's like gate kept, and a lot of
Secret.
this who it's very secret.
Mm,
But the clients that I work with, or more and more investors, are just kind of cutting that out and going, hey, I want to know. Yes, I'm going to listen to my advisors, but I still need to do my own research, and they need to be able to find you when they do their own research. So I think that's where you have to build that, and the relationship is huge. They have to know who you are. And I've actually had interviews with investors for one of my clients where, I wanted to do some onboarding for them. And I asked them, why did you invest with us? Why did you invest with our fund and the people? And the number one answer is, we felt that we could trust the team. They have the right experience. They answered all of the questions. They were very transparent, and they were very honest about the risk factors. That's what it came down to. And one even said the returns aren't even as great as the other funds that we looked at, but we like the people. And that's what gets overlooked a lot.
they do. Like I can tell that you don't take on all sponsor, right? So
Mhm.
what's your idea of sponsor you can help, and what things that you see that you can use your energy, your support, your network to help them? What your kind of avatar sponsor look like?
So I would say it's like two groups. I would put my clients in two different groups. One is first-time fund managers slash emerging fund managers. So, they've raised capital, maybe it's about like a few million, under 10, and now they're looking to create the first 10 million or $50 million fund. And they realize, okay, they've tapped out the personal network, and they really need to scale and get net new investors.
Mm,
And that's a really sweet spot. And I love coming in at that level because they have no, they have no visibility. They don't have a brand. And I help them build all of that and set the foundation for them to succeed. And I help them see the different channels, different ways that they can get in front of net new investors. And that takes time. And that typically takes a few months to set that up. But once they're set, they will have a process at the end of that. And then but that's always challenging because oftentimes, it's kind of like the catch 22, right? It's like they have to have money. They have to raise capital to spend money on marketing, business development, but then they have to invest in marketing, business development to raise capital. So I
mm,
always try to kind of help, navigate that. And then the second group of clients that I work with are more, I guess, mid-range sponsors. You're talking about, like below 500 million AUM. And because after 500 million, you're looking at institutional guys, right? Oftentimes at that, a billion or two, they have a massive team.
yeah.
Um, about like between 200 to 500 is where they may have like one or maybe two marketing people, and they're just stretched out so thin. So I always come in and say, okay, what are the gaps that you have? How can I fill in those gaps? And I work as an extension of the marketing team where, let's focus on the areas that you guys are really good at. And then what are the areas that you want to explore, but you just don't have the resources in place? How can I help? And I always like that because it's like that elevation of their marketing, and like, how do we take it to the next step? So those are like my client avatars.
That's Thank you for sharing that. When someone come to you and they ask you, "Hey, Angela, I want to raise X number of dollars," right? First,
Mhm.
you interview them and make sure they fit in your certain bucket before you can help them, right?
That's
And
right.
because of it, it's also go back to your relationship, your long lasting relationship. And you talk highly about it. People invest in to people who they trust, not the number,
Hmm.
and that's very important. So what separate sponsor who looking to build long term investor relationship than those who just focus on closing the next deal?
I would say that I can always tell when sponsors just want to, sell their deal, and they just sell, sell, sell. And then once the investors actually invest, they don't do any follow up with them.
Mm,
So I think I always look at, okay, so what do you do post sale, post investment? Do you continue to communicate with your investors? What does that investor onboarding process look like? And, do you give them any good resources so they can potentially refer their friends and family? And more often than not, that part is missing. So I always kind of look at that, and that's like an area that we also service because that's really, really important. I always say it's like dating. You're courting, there's a courtship, and now that you finally got, engaged and married, you don't pay attention at all to your partner. It's like, well, no, that's when the real relationship starts. Because
Yep.
this is a long term, any investment is a long term relationship, and you
Mhm.
want to make sure to continue to nurture them. So I always say that's really important. And second is sponsors who really educate their investors rather than selling. I can always tell from the conversations that sponsors have with their prospects when they're just putting on a presentation. They're not
Yep.
asking investors like, "What's your portfolio looking like?" And what are some investments that you've explored, and what made you come to us, and things like that. So asking those questions, it always tells me, oh, okay, so you're actually interested in their investment preferences and strategy rather than, oh, here's everything that you need to know about us. So I always tell them, like, don't present, don't tell them, just ask a ton of questions and make sure that it's a mutual fit. So I think that always separates them. And going back to my point about the second client profile, the avatar about 500 million and below, it's because I feel like you can still build really great relationships at that level, where bigger sponsors, I think as a marketing consultant, it's really hard to add even further value at that point. It's like rinse and repeat. They have the processes. They're pretty much doing the same thing, and they can still generate capital. So as a marketer, I say, oh, that's really not a value I can add. So I always like those emerging sponsors. And I think for sponsors with investors too, sometimes I feel like with investor relations, they're all about, okay, let's make the sale, let's make the sale. But you've got to have some team members focused on after, post investment. Is the paperwork and the technology, is it set up properly? Are you communicating with them on a regular basis? Are you telling them what's actually going on at the company? And that doesn't happen. So that's what separates great sponsors from sponsors that need a little bit more work, I would say.
I I appreciate you sharing all those points, and when you talk, it's kind of helped me think. I do make that mistake sometimes. We don't ask what your holding look like, what your portfolio want. It's more like, hey, this sponsor, this great return on it, and people make mistake, right? We
Mhm.
get caught up so much into the deal, then we don't realize or just don't realize what best for the investor, because they
Mm,
actually want the return, but also they want to invest in that person, right?
mhm.
In
That's right.
in your space, you talk a lot about marketing and digital present online. And as you know, we reached to a new century with AI, and AI
Mhm.
is a big part of the next generation, right? And how we're going to do business, how we create content, how we communicate. So when we making that shift into next AI business, why did you think is building a genuine personal brand become more valuable for the future of raising capital?
I think a few things. One is it's relatively easy to spot AI generated content.
Yep.
There's certain things that really give it
Perfect.
away. Yes. And I can tell you that I have one instance where one industry colleague literally copied my post. And I think they used the same AI, or like they kind of like copied and pasted and then asked probably another, AI tool to rewrite it, but they wrote it almost the same. And
Mhm.
it was just like, wait a minute, I know exactly where that came from. Like that sounds like something that I wrote. And it was
Mhm.
just like really weird, right? But I think originality is becoming even more important because AI can spot that. And, to show up in the AI, platforms, they always search for original, authentic content. And that's where building your personal brand is really, really important. It's your thought leadership. It's actually your original thoughts and originality that matter more. So
Mhm.
I feel like there's a common mistake and perception that sponsors are like, oh, we don't need marketing. We don't need this. We can do all this on AI. But I always say, well, that content is being generated to so many people out there. People can tell when it's like when no one has reviewed it, there's no expert behind it that's prompting it correctly, and
Hmm.
you still need original content.
Right.
So I always tell them, like, AI is great and all, but you need an expert behind it to be able to use it properly. It's great for scaling, but you have to,
Mm.
review that and make sure it's, in your voice and your brand and all that. Because otherwise you're going to get generic content left and right. And I've seen it. I've seen people do that on LinkedIn all the time,
Yep.
all the time.
I mean, guilty. I do use AI to create content. I mean, I add my voice,
Hmm.
my way of communication. That's how I leverage AI. It's not a copy and paste, right?
That's
You
right. That's
can
right.
borrow other people ideas, but you have to form your own genuine content.
That's
So
right.
so how would you like most people don't use AI like the way that you use, right? Because you're in the space. So if you're gonna give a sponsor advice, or business owner how to use AI to become more efficient without losing their own voice and their personality.
So I would say you can definitely use AI for content creation and development. It can give you really great outline of what investors are searching for, what the trending topics are. So you can start there and then just formulate your ideas, but you still need an expert to be able to write that and translate that into something that's thoughtful, that's original. So they can use AI to create as much content ideas as possible.
Mhm.
And it could increase the production value, obviously, because it cuts away a lot of the research and things like that. So for content, I think it's been really valuable. But again, you have to review that thoroughly. You have to make sure it's in your voice, because you can always tell when you go to certain websites and one blog post sounds very different than the other.
Mhm.
It's just all like fragmented. So things like that, you have to be careful with that. And then another way the AI is useful is like the marketing automation. There's a lot of AI features now, like in HubSpot and others, where they can transcribe your call notes, right? So you don't have to do that. And, you can record a lot of the information where it cuts away all the investor relations team members taking notes and having to add those notes, because that was kind of the bottleneck before,
Mhm.
as you start to get more leads on the call. So I think AI is extremely useful there. And I think another way too is like website rebuild and revamp. There's a lot of tools out there where you don't have to hire an agency and have them charge you 20, 30, 50 grand to build a website. You can do it for the fraction of the price. But again, you have to have at least one marketing expert that knows what they're doing to help you do that. So I think it helps you to scale at a reasonable cost, but it's not a replacement for
Right.
marketing and investor relations.
Yeah, absolutely. Because I think it's very important if the investor relationship is have to be human interaction. AI
Mm,
is a good tool to use and leveraging it, but not cannot replace the authentic relationship with the investor. And investor, they know what's going on, right? Human
that's right.
interaction is always the best way to go about it. And
That's
when you
right.
talk about expert, as you know, there's online, there's plenty of experts out there. People are talking different things, and one of the hottest topic discussed lately, and most people don't know what they are, is opportunity zone.
Oh, yes. Mhm.
And see, you've been exposed to it, and I see your work, and you've been talked about a lot about opportunity zone, and it is a long-term commitment on it, right? So for anybody don't understand what opportunity zone or familiar with opportunity zone, can you give a just breakdown what is opportunity zone investment actually is, and just share a little bit how you first involved in this space and
Mhm.
what it look like in next year or future, and how the sponsor can prepare today. I know there's a lot of question in one question, but is it just what is opportunity zone in
Mhm.
summary, opportunity zone, and how sponsor who have it prepare to get this thing out to general public.
Yeah, absolutely. So opportunity zones, the program was created as part of like the 2017 Jobs and Tax Act. So since then, I think 2018, 2019 was a bit of a wild west because this
Mm,
was completely new. The whole point of the program is to put capital in underserved communities that typically don't see private investments.
mm,
So the incentives are that we're going to revitalize the local economies, places where investors will typically overlook. So there's over 8,300 opportunity zone tracks under the current program. And what happened was that the program was going to sunset this year, but last year, due to the passage of the One Big Beautiful Bill on July 4th, the Opportunity Zone program became permanent, which means there's no sunset date. Now the program is just everlasting. So what we're calling it is OZ 1.0. The original Opportunity Zone program that was created back in 2017 now is I would say really 2018 because that's when people started to really pay attention. It's now sunsetting this year at the end of December, and then OZ 2.0 with brand new tax incentives are starting January 2027. And so to put it, plainly, basically, it's a way to invest private capital in, under like distressed, overlooked communities that typically don't see private capital. And what's in it for the investors is that they get this is one of the best tax advantage investment vehicle. So, for investors that have capital gains events, whether they sell their stock, the company stock, or real estate, instead of doing 1031 exchange, they can invest in opportunity zones. Or if they have sold a business or like partnership in a business or cryptocurrency, and others, they have 180 days from their liquidity event to invest in an opportunity zone fund or project, and they can potentially eliminate their federal tax, capital gains tax, if the investment is held for 10 years, or and I should say, and they can defer paying the capital gains tax for the first 5 years. And depending on whether or not they invest in rural opportunity zones, there's additional incentives there. So I think instead of going into like very specifics, what investors need to know is you're helping overlook communities and revitalizing the local economies while deferring your capital gains tax and putting that money to the places that can really use that capital. Um, and it's a long-term investment. It's a 10-year hold. So it's definitely for investors that understand that.
mm.
And what's going on right now is that they're redesignating the tracks to make sure that it's the right zones and the tracks that really need that capital. So there's more, compliance around that. There's more regulations and transparency. So this is a fantastic time for investors to start exploring, because come January, there's just going to be so many new funds out there that are marketing to investors, and you want to make sure that you're getting in front of the right people, and that's what we're kind of helping investors realize and educate.
I think there's a lot talk about opportunity zone, people buying track and raise their own fund and form their own private equity group, to actually manage the fund to deploy in certain area, because not all, like real estate, not all real estate is a good real estate, right? It takes some
That's
time
right. That's right.
to actually to get to revise of the area. So
That's
that
right.
when they get an expert, like someone like yourself, or an expert in that opportunity zone, and verify trust, like you say, um, to get prepared for the next way to investment. That is the investor protection, because it is a long term investment on it. So on this,
Absolutely.
on would you say, for developer or sponsor who have opportunities on project, right? They want to create a fund. How would they be prepared for the next capital raising, in your opinion?
Yeah, that's a great question. And I'm really happy that you raised the point that you just raised as well, where, investors have to make sure that they are getting in front of the right sponsors. And the sponsors also have to make sure that they're taking the proper steps. Because what one concern that I have right now is that now that people are starting to learn more about opportunity zone funds, everybody will try to sort of jump into this space, and you're going to
Absolutely.
find a lot of people who don't know what they're doing that are just taking investor capital. So I really want to caution investors to make sure that they are finding the right, group of people who know and who have been in this space for a very long time. And to be honest, like one of the first places that I would recommend is like literally visiting opportunityzones.com. So it's founded by Jimmy Atkinson. He's been in this space from the very beginning. And, I've known him as long as I've been in this OZ marketing space as well. And he's really curated the leading experts, a group of leading experts, attorneys, service providers, and, CPAs and advisors that have specialized in OZs. So they can easily tell sponsors, hey, the way that you're structuring it, that's probably not the right way. And they can advise sponsors looking at that. And for investors, they can see the leading OZ funds and the projects that are, validated by the other experts. And they can, basically go and check out, oh, okay, so, these are the funds that I should be looking at. So they don't have to do a lot of the research. And I would say kind of start there and talk to the right people. So, anyone listening, if you're thinking, oh, I really want to get into OZs, like I can help do that. And I've helped a couple of clients that have never done OZs, and
Mhm.
I'm helping to advise them because my goal is I don't want you to talk to just random people or the wrong people. That's just going to take your money because I've seen it and I don't want that to happen.
Right, right. I mean, the more knowledge you equip and the more people you talk to do your own research, right?
Hmm.
Even though
Absolutely.
you can make recommendation, but the investor have to do their own research to make
That's right.
sure that investment is aligned with their portfolio or they want to exit it out because like you say it is a long-term investment, right? And
That's
it's
right.
like 10 years, right? You have to stay in 10 years, then you don't pay any taxes. So it's kind of like right, it's a marriage. You're gonna marry to that sponsor for 10 years, so you
That's
gotta
right.
know, like, take that, that you gotta go on a date first. You gotta figure out who they are before you that
Hmm.
tie the knot. Is that
That's
aligned
exactly
what's
right.
going on?
That's it. That's the perfect description. And you're absolutely right. And per that point about investors doing the research, again, I think sponsors tend to think, oh, we're just going to go through the advisor channel and we don't have to do any marketing. And I always tell them, no, I think you're severely underestimating the investors because
Mhm.
investors will trust their advisors, but they're also going to do their own research. So,
Absolutely.
what if the advisors are said, oh, this is where you should be investing, but then investors are doing their research and they don't find anything about you. Like it
Right.
just that doesn't help. But what if the best case scenario, you trust your advisors and you also do your research and find out, oh wow, this sponsor is everywhere. They've been quoted in these, major news, paper publications. They're very active on social media. So there's that trust factor. And that's exactly what sponsors need to be focusing on.
Yeah, that I think you nailed it there. I mean, online presence is help. Your branding is help. What you do,
That's
what you
right.
say, it does help also. So when you look at the future of capital raising, um, what do you think will matter the most 5 or 10 years?
I think that a lot of sponsors haven't really prioritized or thought about leveraging their 506C structure, which allows them to get direct investments. They're just so comfortable going through the broker dealer channel and just more advisor channel, which by the way they should continue that absolutely. But I think they completely overlook the direct marketing, and I think the future is both. The future is not relying on, your friends and family network alone, continuing to do that, but you should also build your own marketing strategy and going direct to investors because that gives you full control. And that gives you the ability to build those relationships with investors directly, and they can potentially also be your referral partners, because when you have that direct relationship and you build a trust over time, they're going to feel comfortable referring their friends and colleagues and so forth. And that's a tremendous opportunity that I think sponsors haven't yet explored. So I think the next 3 to 5 years, there's going to be more sponsors exploring direct marketing, and also with AI, realizing that it's less about spending ad money, paid ads and all that. I think it's more about organic content and building thought leadership, and, just really getting your expertise out there organically as possible. Because, investors can see when it's an ad versus them telling you about, here's everything you need to know about investing in OZs, like things like that. That's the difference.
Thank you very much, Angela, to be on the Sonny Chung podcast. I have a tradition, I have a few closing questions I would like to ask you, so we
Sure.
can close this episode. So let's imagine if you could leave three lessons behind for the next generation. What, for entrepreneur, investor, thoughtful leader, what would those three lessons would be?
Let's see. One is be. I know I mentioned this earlier, but be a problem solver instead of just selling. Like, I think that's really important. Instead of trying to just, like, sell your services, your business, try to figure out how you can solve your clients' problems or anyone's problems, really. I think that's like one of the most important skills. So be a problem solver. Second is not compromising your integrity just to get the next client. I think that's really, really important. And, figure out what price point, what types of relationships matter to you, instead of just trying to, just expand and just get, as just any client. I think the integrity is really important. And third is, just like, again, being original, especially with AI. I bet you the originality is gonna be like one of the most valuable assets. So, having your own voice where people can recognize, oh, wait, that's Angela talking. Oh, that's, so and so talking. I think that's really, really important. So it sounds a little cheesy, but I think integrity is really important to me, being a problem solver and just being original, because there's going to be a lot of competitors in the market for anything that you do. But what people are going to remember is, oh, okay, that person was different because of XYZ. So think about how you want to be remembered, how you want people to talk about you, whether you are a solopreneur, or a business owner, or a fund sponsor. I think that's really important to think about.
Well, Angela, I think you share a lot of great detailed information here. If anybody listen to it, I hope you can find some golden nugget from Angela and my conversation. One thing I want to add, what you say, the integrity and who you are is so underrated, but your authentic, your authenticity is who you are. That that's
Mhm.
that's your DNA, right? Well, Angela, thank you very much to join the Sonny Chung podcast today. It's a pleasure to have you here.
Thank you. Thank you very much for having me. It was wonderful to speak with you.
Thank you.